Good evening, and welcome to this week's special presentation for Friday, May 24th, 2019, entitled The BSR, Your Canary in the Mine. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest, and it's truly my pleasure to give your presentation this evening. Everyone knows when you go into a coal mine, you can be exposed to dangerous gases. Now, what do you do in case that happens? You bring a canary in the mine. The canary serves as a warning of danger to get out in an orderly fashion. A warning is a call to action, orderly action, not panic action. Well, as a VectorVest subscriber, you have an orderly call to action when the market sends a market warning. This indicator is known as the BSR, or buy to sell ratio. Now, before we get started, let's start to talk about how a stock gets to be a buy or hold or sell recommendation every day in the software. Buy, sell, or hold criteria. Let's start with the hard one, buy recommendation. 4 things need to happen for a stock to get a buy recommendation. The price has to be greater than the stop price. Number 2, the VST, or our master indicator for ranking stocks, also has to be above the value of 1. The third thing, relative timing, which looks at the short-term price trend of the stock, has to also be above the value of 1. And last but not least, the stock's price must be diverging away from the stop price. So the price greater than the stop price. The master indicator for ranking the stocks have to be above the 1, which is cast on a scale between 0 and 2. RT, also cast on a scale between 0 and 2, needs to be above 1, telling you the stock is in an uptrend, and the stock's price has to be diverging away from the stop price. So that's how you get a buy recommendation. So there's a lot of work that goes into a stock to get a buy recommendation. It's not a willy-nilly thing. It is actual factual data, and the stock has to go through all of these parameters to get a buy. The easiest one, in order for a stock to get a sell, the price has to be less than the stop. Now, you heard me say stop price up here. Let's explain what the stop price is. The stop price is a 13-week moving average of the price adjusted for the fundamentals of the stock, which we look at, the RV and the RS. So, a stock's price movement, if the relative value and relative safety are good, we're going to lower the stop price to keep you in that fundamentally sound stock longer. But if the fundamentals start to wane, we're going to raise that stop price closer to price so that you can get out of it faster. That's the easy one, stock's price falling below the stop price. Now the other one, a hold. Price is greater than the stop price, but one of the other 3 factors needed to receive a buy are not met. And that's why we have always more holds than anything in the software. Now I want to also bring something else up. Just because a stock has a buy recommendation doesn't always mean it's the right time to buy. These warning signals that this buy to sell ratio will help you with help to better explain that as well. Market timing is key. Just because the stock has a buy, make sure that the market timing that you're using is telling you it's okay to buy stocks. Just because the stock has a buy, if you buy it in a downtrending market, it's not going to do good for you or actually do well for you. So just keep that in mind. So keeping and understanding how a stock gets to be a buy or sell or a hold is the basis to what the buy-sell ratio does. If we move to the next slide, the definition of the BSR is a ratio of buy recommendations divided by sell ratings of all the stocks in the database. So from this indicator, we can truly see how many stocks are participating in a rally. If a market is going up, more stocks should be meeting the criteria to become a buy recommendation. But when that's not happening, that's your warning sign. What's the purpose of the buy to sell ratio? It indicates the internal composition of the market. What's its function? It signals the overall strength of a rally or of a retreat. So if the market's moving up, More stocks should be taking part of that rally by getting buy recommendations. When the market is going down, more stocks should be coming more sell recommendations. So we are the only software in this industry that shows the overall health of the market by way of the indicator buy to sell ratio. Now, this is where the warning comes in. Look for a divergence between price and the buy to sell ratio, or BSR, as a warning. So if the market is going up but the buy to sell ratio is going down, that is your warning sign. That is your canary, but in this case, in the market. All right. Now that we have an understanding of how a stock gets a buy, sell, or hold recommendation, now that we understand the definition and what the buy to sell ratio does, let me now take it a step further and show it to you graphically as that canary. Let's open up the software. We're going to move from the home page, and we're going to go straight to the graphs. Now, we're going to spend all of our time in a market timing graph showing you how our canary, the buy to sell ratio, can warn you of potential danger in the market. But what did I say about a warning? A warning is a call to action in an orderly fashion, not a panic situation. So I'm going to put that into more perspective in a moment. First thing we're going to do is change from a stock graph to a market timing graph. As we do that, we're looking at the VectorVest composite shown in candlesticks over the last year. Now, all I'm looking at on this graph is just the buy to sell ratio, not our other indicators as the MTI or RT right now. This is where we get our warning sign. What did I say? We look for divergences in price action and the buy to sell ratio. Notice how the price action, let's go draw a freehand line. Price action is moving up here, whereas the buy to sell ratio is doing what? We're hitting lower highs. Here, we're hitting higher lows or higher highs, but we're hitting lower highs on the buy to sell ratio. And what's going on in the market right now? From this perspective, we're actually getting to a point where the market is moving lower. Now, this is where we say, and let me take off all of these other lines real quick, and let me add this line back. What do we say as a warning? So when I see the buy to sell ratio going lower, as the market is moving higher, less stocks are getting buy recommendations. That means more stocks are not taking advantage of the uptrend or rally in the market. And what's going on right now? Precursor. The market is falling down. Not only that, let's add a little bit more confirmation to this. Let's click on the confirm calls. Boom. Now, what do you do when you see this divergence? This is your warning. This is where you start to not have as many stocks in the market. This is where you start to put some defensive mechanisms in place. What is your call to action? Right there. You got a confirm down call. That helps to let you know when to trigger the action after you see the divergence between the buy to sell ratio and the price of the composite. That's extra confirmation to say, bingo, time to go, but you were doing it in an orderly fashion. Taking less stocks in the market at this time, taking some of them off the table, maybe starting to take profits on some of the stocks that you own. As this happens, now you're not blindsided when the market starts to fall. Does the market still have some downside? Well, I'm not going to prognosticate at what's going to happen, but I can clearly see that the buy to sell ratio is below the value of 1, and actually it does have an indicator to tell you when the market is looking for a bottom as well. But that's a conversation for another time. This is that divergence. This is your canary in the mine to protect you before the market gets to this situation. Well, let's back up a little bit more. I'm going to keep this on a 1-year graph and just move back. How about back in 2018 where the market sold off big time, back from the October to December time period? Notice again, the price of the VectorVest composite moving up beautifully, but look at the buy to sell ratio, trending lower. Less stocks were getting buy recommendations, taking advantage of the uptrend in the market. Price action shows the market's moving up. But as a VectorVest subscriber, you have a warning that lets you know, just be careful. And what did the market do? Boom, it fell. Where was some confirmation? Confirm call. We got a little bit of whipsaw here, but look at that. Was that a good opportunity to get out of the market before it fell as much as it did? It darn sure was. But here is your warning, and there was your confirmation by the slowest, most conservative timing call we have. And there we go. If I move this back a little bit more, oops, other way. Market fell. Was that an opportunity to save your portfolio? Look how close we got out by way of this warning sign and confirmed call to the top. Was that a better opportunity to get out here or even here? And there's your warning sign prior to all of this happening. Now, I'm going to do one other thing. I'm going to take us back to 2008 and show you just how good this happened as well. We all know what happened back in 2008. The market went through the financial crisis and the market fell off the face of the earth, and man, we were on the precipice, as a lot of people would say, on a depression. Well, the market fell hard. Now, a real quick look. This is back in 2008. The actual high of the market was on 5/19 of 2008. Confirmed call got you out on 6/11 of 2008. That in and of itself was a beautiful call. And look at that before the market fell. A real quick thing here. Buy to sell ratio. Hit a little bit of a high here. Lower high, and before all of that happened, boom, good warning sign. Market was pretty much moving sideways at that time, but even in that sideways move, less stocks were taking advantage of the previous move as the market was moving up. All right, that was a good call. Let's step back just a little bit more. All right, let's go back to 2007. Notice here, as we hit a high, all right, we hit a high on 10/11 of 2007. There was the confirmed call down. What was this? This was a rapid succession after the market had rose higher of the buy to sell ratio falling as the market went back higher again. And look at that confirmed call happened on 11/1 of 2007. Man, that was another great call as the market started to fall. So all of these indicators, whether it's 2008, I can go up in time, back in time. We all know what happened in 2009. The market took off like a bird, the biggest move that we've had in about 70 years. I can still continue to go in time, and all I'm looking for are the opportunities where price was rising and the buy to sell ratio, and the buy to sell ratio was falling. Buy to sell ratio was high pretty much all through this point, but hitting lower highs as the market was running. That wasn't a big pullback, but it was a pullback nonetheless. I'm just going to keep going through. Market moving higher here. Let's draw a line. Look at that. Market moving higher here. Higher lows. Look at the buy to sell ratio. Lower highs. What happened subsequently? It fell, and what did it do again? It fell harder, and what did it do again? It fell harder. So all I'm saying, the buy to sell ratio, you know how important it is for a stock, or how hard it is for a stock to get a buy recommendation. When the market's moving higher, you want to see more stocks taking advantage of a rally or a trend up. But if stocks are getting less and less buy recommendations as the market's moving higher, that is a warning sign. And folks, I challenge you, continue to go through the software time and time again, and you'll find opportunities where the market was moving higher. Here's another opportunity, market moving higher and the buy to sell ratio moving lower. A lot of these pullbacks may not be very strong, but they're strong enough to say that I don't want to give up money during that time period. All right, the price moving up, buy to sell ratio. 3-4 days of solid move to the downside. Now, does that mean that every time you have a divergence like this, you're always going to have a big move? No. But when it does happen, it happens. And you want to be prepared by way of the buy to sell ratio. And I'm going to go all the way back to the most current time period. Again, we're in the same scenario once again. The price of the market is moving higher. But notice that the buy to sell ratio is moving down. Do we have some downside? We possibly could, because as the market was moving up, the buy to sell ratio was moving down, and the market is now feeling the effect of that. But we'll have to see what's going on. But folks, that is your warning signal. That is your warning sign. So with that, take it at face value. I love simple, easy presentations. This is another sign of just simplicity to help you to make the better decisions. And this indicator is not found anyplace else in this industry. And if you use it correctly, it can save your bacon time and time again. So with that, folks, I'd like to say thank you so much for joining me for this week's presentation. I hope you have a wonderful weekend. Adios.